QuickBooks Pro Desktop 2021. Write checks for expenses and prepaid assets. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitar homepage. We currently have the open windows open. You can open the open windows by going to the View dropdown and selecting the Open Windows list. We're going to be entering some checks. We're going to be entering checks for both expenses and prepaid expenses. Let's first open up our financial statements to consider what will be the impact on the financial statements. I'm going to go to the Reports dropdown. I'm going to go to the Company and Financial. We're going to take a look at the Balance Sheet Report. Balance Sheet Report. Changing the dates up top in the Customized Report so we can get that range, so we can use the Zoom feature. It's 01/01/21 to 12/31/21. January through December 2021, and okay. The first check we're going to write is going to be for insurance. Now, that's going to be a little bit more of a confusing one when we think about insurance, because it's a little bit different than some other expenses that we have. For example, if we pay the phone bill, if we pay the utility bill, typically the service has been provided and they're billing us at the end of that providing of the service. At the end of the month, we're basically paying it at the same point in time we got the service. Therefore, we will simply expense it at that point in time. However, insurance is a little bit different because by definition, you pay for the insurance before they give you the coverage. And it's also a little bit confusing on what they're giving you because you don't really realize that you're getting anything until a tragedy happens with insurance, right? But you are getting something even if there isn't a problem and you're not collecting on the insurance, you're getting coverage. But the coverage is happening in the future. So we're going to get coverage in the future. Now, there's a couple different ways you can account for that then. If you're just paying for 1 month at a time of insurance, even though you are prepaying the insurance before they give you the coverage, then it might be close enough that you can just do the same thing. You could just expense it when you pay for the insurance. However, if you're paying for like 6 to 12 months of insurance or more in advance, which is often the case for insurance so that you can get the lower rate and whatnot for insurance, then you can't really just expense it, because if you expensed it and you compared like January to February and you expensed a whole year's worth of insurance in January and no insurance in February, then it would distort the comparison of January to February in terms of performance-wise. So what we want to do then on an accrual basis would then be to say, okay, we need to basically put it on the books as an asset, and then we're going to allocate it to the periods in which the insurance is being utilized. So that's going to be the general rule. If we do that, if we choose to do that, then you have a couple different options in terms of how to execute that. If you're a bookkeeper or an accountant, then you could basically say, hey, look, the normal way is that you say, I'm going to put everything into the prepaid insurance account, an asset type of account, and then adjust it monthly. I'll adjust it monthly in order to account for the consumption of the insurance. Or if you work with a bookkeeper or something like that, like a tax firm or a CPA firm that might do the adjustments for you periodically, either monthly or yearly, you could basically say, hey, look, I put all the insurance into prepaid insurance, provide this information to the tax preparer, and then tell them to make the adjusted entry for you, meaning it's on you to then make that adjustment entry for us. I'm just going to post everything into the prepaid insurance type of account, and then you make the adjustment when you need to make the adjustment for it, maybe yearly or maybe monthly, at least yearly for the tax preparation. So those are a couple options that we can have. So what's going to happen when we enter the check for insurance? It's going to be decreasing the checking account. The other side isn't going to go to an expense, but rather go to a prepaid asset, prepaid expense, prepaid asset type of account, which is going to be prepaid insurance. And then again, we will expense it over the time period that the insurance is being consumed. Let's do that. I'm going to go to the home page. Within the home page, we can go to the write checks here. Also note that you could go to the register because we're basically just entering a check. If you're using bank feeds to do this, then obviously when you write the check, it'll pull through on the bank feeds and you'll be able to see it then, and you can add it. So we'll talk about bank feeds later. But once again, you're going to need to know where to assign the checks. So you kind of want to get a feel for, what the bank feeds would do in terms of the type of form that they will be linked to. If you do the bank feeds, and you need to know what expense account or asset accounts in this case to tie them out to. So instead of using the register this time, I'm going to go to the check form. So we can do it by going here, or we can go to the banking up top and we can go to write checks. Now this write check form is basically the form that you would use to decrease the checking account in any format you're going to do the decrease of the checking account. In other words, if it's not a check, then you can just delete the check number here, and it could be an electronic transfer or something like that that might be decreasing the checking account. We're going to assume that it is a check for us, and we're going to keep the check number, which is auto-populating for us. So then I'm going to say this is going to be 01, I would say 2821, 012821, and I'm just going to make up an insurance company name for our vendor, Safe Insurance Company. And so I'm typing that in there. We don't have them set up yet, so I'm going to say tab. It's going to ask us to set them up there, like, hey, we don't have this vendor here. Do you want to set it up? I'm paraphrasing what it says here. And we're going to say, yes, we want to set it up. I don't need all the detail, just a quick setup, please. It will be a vendor because we're paying these people. We're going to say okay. And then the amount, I'm going to say 11,000. So we'll say it's 11,000. This is going to be the Safe Insurance memo. We might want to put a memo like if this is for the year of insurance, and maybe like the expiration date or something like that would be nice to have in a memo format. And then down here, notice we're on the expense side of things, not on the item side of things, as we would be if we were dealing with the purchase of inventory. And then we need to assign an account for this. So I'm going to hit the drop down. Notice the temptation here, of course, is to go into insurance expense, which is already set up. But if you want to do the prepaid insurance thing, typically you're going to start by putting into a prepaid asset account. So you're going to say, I need a prepaid asset, which is going to be insurance, and then expense it over the time period that it's consumed. The quicker way to do it is simply to put it into the insurance expense account. But if you do that, then again, when you do your comparisons from January to February, you got to account for the fact that you don't want to say, hey, January was a terrible month and compared to February because the net income was lower and then you look at it further and you say, well, that's only because I paid for the insurance in January that affected the entire year, which isn't really fair. So then when you start to do your analysis, you'll have to take into consideration those distinctions. That's why we use the accrual basis method for these types of things, so you can do that kind of comparison. But it does take 2 steps in order to execute, and you could do those 2 steps either yourself and possibly a CPA firm that needs to do that step for tax preparation or adjustments at the end of the period. Okay, so there's nothing up here yet for the prepaid insurance, so I'm going to add it. And typically I will add it by typing in prepaid insurance. And then tab, it's going to say you need to set this up. And I'm going to say, yeah, I want to set it up. And it's going to default to an expense. We don't want it to be an expense. We want it to be an other current asset account. We want it on the balance sheet. So it's going to be an other current asset type of account. I'm going to say continue. And that's all I need. So that looks good. So I'm going to say save on that. And this is going to be year of insurance. And you might want to put like the expiration date would be nice there. It's not going to be a billable item or anything like that. So I'm going to say save and close. And then let's check it out. Going back to the balance sheet, we now see the checking account, double clicking on the checking account, going down to the 11,000 for the insurance. There's our amount in the 11,000 there, closing this back out, the other side, then going to the prepaid insurance right here. It's an asset, other current asset. It's not on the income statement. Double clicking on that. There's the 11,000 in the prepaid insurance. So closing this back out, we will expense that. We'll take it out of this, decreasing this, and recording the expense typically on a monthly basis, or you might do it for tax preparation at the end of the year. So I'm going to do this again, this time for office supplies. So we're going to take a look at office supplies. Now, office supplies, you could have a similar type of situation, and this would be things if you're stacking up the office supplies in the office. If you're thinking about like an accounting firm, you might be talking about paper and ink for the printer, for example. If they become significant, then you might want to track them in a similar way as you would track inventory. To do that, you'd have to basically do a similar thing we did with the prepaid insurance. You'd put it on the books as an asset, office supplies, and then as you consume them, you'll have to take some inventory count. You might use like periodic inventory type of system, counting the office supplies at the end of the month or something like that to see how much you have consumed, and then you would write down the office supplies as you go. So if you're in a company like a medical supply company or something like that, tracking the medical supplies becomes quite important, and you track it in a similar way as you would with inventory, and you'd have to put it on the books, track it, count the medical supplies, and so on and so forth. If you're at a fairly small business and you're saying, hey, the office supplies are something I consume fairly quickly, or the office supplies are fairly small with regards to my other expenses, then you might just expense them at the point in time of the purchase. So that's what we're going to assume now. We're going to expense them at the point in time of the purchase. But again, just realize if the office supplies are significant, then you might want to have to put them on the books in a similar way that we did with the prepaid insurance, except for the fact that now you actually would have to track, like inventory, the flow of the office supplies. But when we write this check, obviously the checking account will go down. The other side this time will be on the income statement. So I'm going to hit the reports drop down. We're going to go to the company and financial, take a look at the P&L, the profit and loss, changing the dates from 01/01/21 to 12/31/21. So we're going to have an expense down here, which is going to be related to the supplies expense of some kind. So I'm going to go back to the home tab and we'll add a check. So once again, we can do that here. We can use the check register as we have seen in the past, or you can go to the banking drop down and go to the check. You will use the check. The check basically means that we're going to be decreasing. This is the form used to decrease the checking account. Doesn't necessarily need to be a check, because you're going to see the same kind of form used if you do some kind of electronic transfer oftentimes. And so then you just wouldn't have the check number here. You'd say it would be some other format. But I'm going to keep the check number, and we're going to say this is on the 28th as well. We're going to say this goes to Staples. I'm going to put in Staples, which is a supply store. Now note that as I put this in, there is no vendor, so I'm going to say tab, adding that. I'm going to quick add it here. I'm not going to put all the detail in it, simply quicking adding it. Notice that we do not need the detail most of the time. I just need to know who to write the check to in order to do the payment. I don't need the address and whatnot typically. So I'm going to say okay, as we would for a customer. For customers, all that information oftentimes is more important, or for our primary vendors, like who we buy inventory from. I'm going to say this is $500. We're going to go on down below. Also note that as we enter these, because we're entering it for the first month, we're having to add everything. So the first month is going to be more difficult as we add these kind of typical expenses, some of which we expect to see on a month-to-month type of basis, meaning we have to add the vendors, and then we have to add the accounts down below. In the following month, the vendor should already be there. So, and once we choose the vendor, then we will see the accounts populate automatically. And we'll see some of that. That's why we're going to do 2 months of data input, or one reason to do 2 months of data input. So you can see that the second month should be an easier process for many different reasons, including bank reconciliations and just the data input. The general rule, if you're taking over the books from some other bookkeeper, then you don't really want to add a lot of new things. You basically want to keep with the system, and then as you make changes, you want to basically adjust them in a systematic way so you don't bloat the system. In other words, if you don't want to add like another vendor here if you already have a Staples vendor, unless you have a particular reason to do so, in whatever account that the prior expense account was going to for that particular vendor is the default account that you want to continue with to be in compliance with the consistency principle, unless there's some reason to deviate from it. And if you deviate from it, then you kind of want to think about how exactly you're going to do that. Now, also note that there could be times where you have one vendor and then multiple type of expense accounts that you will be dealing with that vendor. So if we buy, furniture and fixtures from Staples and expenses or supplies, small supplies, then we might have 2 different accounts down below on the expenses for the 2, and that could be a little bit confusing. And if you do that often, if you have one vendor where you break it out between 2 expenses, oftentimes you might want to have actually 2 vendors. You could say a vendor and have a small indication that it's going to be for like large purchases versus small purchases, and that way every time you enter the data or add that particular vendor, you won't have to change a related expense account that will start to populate automatically, and that's one way you can make your data input a little bit more easy and consistent, and possibly make it so that other people that do the data input can just pick it up without having to make the changes every month. So we're going to hit the drop down here. I'm going to look for an account that's going to be like office supplies, because that's what I want to pick up here. Again, my general rule is to say, hey, these accounts were given by Intuit. I'm going to see if I have one that's appropriate. If so, I will use it, and only if not, will I then add an account. So I'm going to say, all right, we have office supplies. It's an expense account, so that looks good. I'll pick that one up. And then you might want to put a memo of what type of office supplies and whatnot are here. I'm going to save and close this. When I do, it's going to be decreasing the checking account, increasing the expense account. Let's do so. Save and close. Let's check it out by going to the balance sheet. And then in the checking account, double-clicking on that checking account, going on down to the office supplies, double-clicking on the 500. And there is the $500 check, closing this back out. Also note that if you were doing bank feeds, of course, you would see the 500 in the bank. It would be a decrease to the checking account on the bank, and you would still need to assign it to the proper location. And then when you look at it, you'll still be seeing the same type of form, which is a check form. The check form being the type of form that will typically be used when you decrease the checking account, even if it's not an actual check that you use to do so. Let's go to the profit and loss account then, and we have the expense down here, the 500. That's going to be decreasing the net income. So double clicking on that 500, we see once again our check 1007. Let's close this back out. Okay, let's go back to the balance sheet. We're going to enter another check, and this is going to be for our utility bill. So we're going to say this is going to be for our electric bill. So we're going to be reducing the checking account once again, and the other side is going to go to the profit and loss. It's going to be an expense. We'll put it into utilities expense. And this is something that we're paying at basically the same point in time we got the usage, meaning they bill us after the usage, like right after in the same month or right after the month. Therefore, it's appropriate to expense it at the point in time that we basically pay it, typically. So I'm going to go back to the home page. Also note that in the following month, we will do this process and enter the bills into the bills item up top and take a look more at the accrual process of the accounts payable, because you might be holding on to these bills. You might want to enter the bills into the system, hold on to them, and then pay them, as they become due, instead of just holding on to the bills and then writing the checks basically at the end of the time period they become due. It's nice to be able to use the bill pay feature. We'll be using the bill pay feature, doing more of a accrual basis system next month. This month we're going to be doing more of the cash basis, just paying the cash when we get the bill. So we're going to do, once again, write a check, which you can go into here. You can go into the check register and enter this information into the check register. I'm going to go into the banking dropdown and write the check. So here's the check form, which is the form that will be used when you decrease the checking account, whether it be a check typically or some other type of payment. You'll often use, this form, which will indicate the decrease of the checking account. We're going to use a check here. It's going to be check 1008. It's going to be the same date. And then we're going to say that our electric company is Edison. So we are imagining we got a bill from Edison. So we have Edison here. I'm just going to simply type in Edison. New vendor. We're going to have to add the new vendor because it's the first month of operations, and therefore we don't have these vendors in the system yet. So I'll say tab. We're going to quick add it because I don't need all the detail. I just need to know who to pay. It will be a vendor because we are paying them. Then they're providing us a service. We're going to say it's for $620. So 620, we are on the expenses side of things. We're going to assign that to an expense. Now note, when you assign the expenses, you want to then consider how much detail you want in the expenses. And this often is going to be an issue. You're going to say, is this something that's unique enough? Is this something that's unique that I want to break out into its own expense? Or do I want to group it together in some other kind of expense as well? So utilities is often used for like the electric bill and the gas bill. It used to be electric, gas, and phone bill, but the phone bill has become significant enough that it's typically broken out of utilities now. So you could use like utilities for those too. But if your electric bill is high and you want to track that individually as a different expense account, you might just have the electric expense and then the gas expense if those two are something that you want to be breaking out. So the more expenses that you break out, the more detail you have. However, if that detail isn't relevant, if you have a whole lot of different expense accounts, it becomes more burdensome to record the transactions. It becomes more burdensome to go through the expense accounts and more burdensome to analyze what's going on the financial statements. So less expense accounts is cleaner, easier to look at. More expense accounts gives you that more detailed view, but at the cost of, you know, a muddier kind of thing to look at, a longer thing to look at. All right, so let's hit the drop down. We're going to see if we have an expense account related to the electric bill. Utilities is the one that I will use, so that one has been provided for us. So we're going to say pick that one up. If you have the memo, you might want to put the month that has been covered or something like that in the memo. We're not going to have a job that's going to be assigned. We're not going to make this billable here. So we're going to say save and close. And let's check it out. Let's go to the balance sheet and then open up the checking account. Opening up the checking account or double clicking on it, there's our utility bill. Double clicking on that 620, there is our check. Closing this back out and closing this back out. Go into the profit and loss. We see now utilities has been included, increasing the expense account, decreasing net income. Double clicking on that. Double clicking on the check here. Also note that if you're printing the checks from the system, you would hit this print later item up top, and that will make it so that you can then print them all at one time. And to do that, you will need pre-printed checks that you would then put into the printer in the proper format, in the proper way, and then you're going to print the checks out on them. So even you're not going to just print the check on a paper check. In other words, you still got to get the checks from the bank and put the checks into the system that are pre-numbered. This number then should line up to the pre-numbered checks on the checks that you would get from the bank. If you're doing some type of electronic transfer or something, you know, like that, electronic payment, then you might still use this form and you just wouldn't have the check number here. Or if you're actually writing a check and you don't write a whole lot of them and you want to just manually write the check, then again, your check number here should line up to the check number on the check that you are manually writing. Okay, so I'm going to close this back out and close this back out. Let's go back to the balance sheet over here. Now we're going to do the telephone. We're going to pay for the telephone bill. So that's going to decrease the checking account. And once again, if we go to the profit and loss, we will have an expense. It's fine to expense the telephone bill because typically, once again, we get billed right after the usage of the telephone bill. So the usage and the payment typically line up pretty close. So we just basically expense it at the point of payment. So I'm going to go to the home page. And we can write the check down here. We can enter it into the check register, or we can hit the reports drop down. The banking drop down and write check. So we're going to write a check. It's going to come out of the checking account. Once again, we're going to let the number populate for us for the check number. If we had some other format of payment, like an electronic payment or something, if we're picking this up from our bank statement or something like that, and we paid in some other format, then we would delete the check number and possibly put some other reference if we so choose there. Then we're going to have the same date, and I'm going to say this is Verizon's our company. Verizon. We haven't paid Verizon yet in this system, therefore we're going to add it. I'm going to add it by typing it in there, then selecting tab. And then I want to do the quick add. So I'm going to do a quick add. It will be a vendor, so I'm going to say OK. The amount's going to be for $360. Memo, you might want to put a memo in there telling you the month that was covered and possibly some more details in terms of the phone bill if you so choose. We are on the expenses side rather than the items side. Once again, I'm going to select the drop down and look for and see whether QuickBooks has provided us an appropriate expense. You would think they would for the telephone expense. So there it is, telephone expense. That looks good. Once again, you might want a memo here, possibly saying the coverage of the month so that you can tie it out to the proper bill if you wanted to go and pick up more detail related to it. So I'm going to say save and close. Save and close, and we're going to go to the P&L. Let's go to the balance sheet. And let's double click on the checking account again. Double click on the checking account. Going down, we see the Verizon bill. Double clicking on that item, there is our bill. So I'm going to close this back out. We're going to go to the P&L, the profit and loss. We see the telephone bill down here, the $360, the $360. So note once again, if you're doing this, if you're thinking about doing bank feeds after you kind of understand the process, then the bank feeds will actually input the check into the system, right? You're going to get the check will be from the bank. Now note, if you're doing a full service bookkeeping system, when you write the check, you would typically want to put it in the system when you write it so that you know that you wrote it, and then you can see when it was cleared. So that's typically what you would want to do. But if you want to do like a quicker system that doesn't have as many controls but might be faster, you wouldn't enter the check when you wrote the check, and you just wait till it clears. And once it clears, then the bank feeds would put it into your system, and you can basically add it, and then you'd have to know that you're going to add it as an expense account. So we'll talk more about the bank feeds later, but just note that that's a little bit different of a system. If you're doing a full bookkeeping system, you'd want to enter the check when you write the check. But a lot of times if people are doing electronic payments and they're a small business, then they may not be recording the payments that they're making when they do the electronic transfer of the payments, but might be waiting until they clear the bank. And in that case, then you're going to get it at the point in time that it clears the bank. You might do that with bank feeds, and then you'd need to basically assign out the information here. So just, there's a little bit of a distinction between the full cycle and then the bank feeds. If you want to do the full service, there's pros and cons to doing a full business cycle. It's better really to enter the payment when you make the payment, because then if there's a problem, you can look into it and say, yeah, I wrote that check, it didn't clear, rather than just being kind of in limbo until the check actually clears. So again, we'll talk more about the bank feeds in the future, but you want to get the full kind of accounting cycle down, get these forms kind of down, so that you can understand once you get the bank feeds how they fit into your accounting cycle, and how you can then, which forms you're going to use and will be populated when you add them to the financial statement. So this is where we are now. If we go to the balance sheet, you can check this out if you are following along and see if you're lining up to the numbers that we have here, the P&L. Let's take a look at the P&L. This is where we are here. I'm going to open up the trial balance. I think that's the easiest thing to look at to check your numbers. Going down to the accounting and taxes, trial balance. I'm going to change the dates up top from 01/01/21 to 12/31/21. And there is our trial balance.